What is good, Tesla family? It's Ray J back with another video, and in this one, I want to break down what's going on with Tesla, SPY, Nvidia, the QQQ, and a couple of other tickers. I'm going to break down what data is coming out that's somewhat important for the markets for tomorrow, what the news is saying about Tesla, what you should be watching for us to give you guys my price predictions for the charts for tomorrow. But before I break anything down about all this information, before I talk about what's going on with the market, as we have lots of options expiring for SPY for tomorrow, let me just mention a couple of things. I am firstly not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends very soon. It ends in just about 4 hours, so check it out before they run out. Anyways, let's break down what's going on with the market and Tesla. So looking at Tesla, we had a very, very interesting looking day today. In the morning, we got this little pop before we dropped just a little bit. And this is similar to what I was predicting. But then what happened was we saw lots of buyers stepping in as time went on, and we started to see them push Tesla and the market up. When Tesla was over here in the 274s, I released another video and I told you all that Tesla was looking quite bullish and we should see more upside as time went on. And Tesla continued to push almost to about 277, closing quite green around 276.04, up 1.75%. So the question now is, how will Tesla move going forward? In my opinion, is Tesla looking more bullish or bearish? How is the market looking? I'm going to answer these questions in the next couple of minutes. But let's first talk about what's happening with the data for tomorrow and some other important factors. So for tomorrow, I just want to remind you all we have some imports and exports data, not that significant, but it may cause some volatility alongside the industrial production numbers and such. Now, this may cause the market to either just remain kind of flat or maybe even gap down just a tiny bit. I think it's not going to be that crazy for the way we open. However, either approaching this data or after this data comes out, I think the market's going to pump. That's my prediction for the second part of the data at 10 o'clock a.m. Eastern time tomorrow. We have the Michigan Consumer Sentiment Report, the Michigan inflationary expectations, the 5-year inflationary expectations, and all this data from the Michigan surveys. This is going to be very important because this data has led to the high volatility in the past. It's given investors good ideas of what consumers and investors are expecting. So I'm anticipating the market's going to either pump approaching this, or after this data comes out, the market may pump even more. I'm going to break down exactly why that is on the charts in just the next couple of minutes. But first, let's also talk about this. We also have a lot of options expiring tomorrow on SPY. And this is going to be a very, very big day coming up tomorrow. We have about a little bit over 1.5 million calls expiring tomorrow and about 3.5, a little bit more than that, 3.5 million plus of the puts expiring. So we have a 2.27 puts to call ratio. The majority of positions are going to be puts with max pain at 440. So with all of these short positions expiring, the market makers are incentivized to try to hold the market up. Now, because max pain's at 440, they position themselves so that no matter what happens, whether the market goes down or up, the market makers will come out on top. However, I believe personally they're going to push us up at least temporarily during the morning. We could see the market either just remain flat after that and hold up, or even push even higher. And still, we should be seeing some decent bullish price action nonetheless. And I think that this options chain is going to contribute to this because they're going to bring more of these in the money puts out of the money and cause as much pain as possible for the shorts as they're making up the majority of these positions. Now, that's very probable just looking at the options chain. As far as Tesla goes, we have some new articles that came out. Tesla's new car building process could be huge for their future. You have a new die cast process. This could significantly reduce costs and simplify their manufacturing process to make them a lot more efficient. There's a lot of news coming out about this. This is going to be part of their 3D printing and sand cast mold. All of that coming together is going to be huge for their production phases. There's also a lot of talk about this phase being used for the new $25,000 model, and this could make things not just more affordable, but efficient for the building process. They were talking about this for helping to limit manufacturing costs, helping this become a lot more simple for the body casting team. Now, one thing that I just want to note is that this is not like officially completed just yet. Tesla has not made a final decision just yet whether or not they're going to commit to this, despite what the articles are saying. But there's a lot of talk about this potentially happening, and this would still be great for them nonetheless. We also see right here, Tesla believes it found a solution to many problems. Rather than testing complete presses, its suppliers found a way to iterate using sand casts that cost much less. So once again, they're working on this. They're going to be testing it. And once we find out for the final approval, Tesla's team will decide on this. We're still waiting for that, but it's going to be great for them if that ends up being the case. Now, I'm just going to quickly go over some new updates that came out for their software. We can see right here, there's some new changes being made. We have some new service mode release notes that came out, and this is going to give us more breakdowns about how it's looking. So the new features coming out right here in their update statuses, and this is going to be used for better monitoring and things like that. This is what was reported. There's also going to be service mode. There's some updates coming out to that. That's going to help people know when anything needs to be done. And then on top of this, I think that's pretty much it for the update that just came out recently. There are going to be more updates being made to the user interfaces very soon. I read about that too. And we're going to wait for that to come out before I say anything else. But for now, things are looking quite decent. Looking at Tesla's overall inventory levels, they're starting to drop even more as demand is going up. This is very good for the global state of Teslas. The Model Y demand especially is going up, and we're starting to see their overall inventories drop more and more. This is so good that the Model X, the Model S, and the Model 3, all of their overall inventories are very close to normal levels. The Model Y is a little bit hot, but it's starting to cool off and approaching these normal levels as well. So it's a very, very good sign for Tesla. Demand is increasing for September. Now, remember, historically, September tends to be good for sales. October tends to be a tiny bit slower, but then November and December tend to be monstrous months for Tesla. So that could be very good for them. Volume was 107 million, which is a little bit below average, but not that bad. And on top of this, the short volume right here relative to price started going up a little bit. So we started to see more shorting over the last couple of days. I think this would have dropped today once this updates, but for now it did go up just a little bit. I was talking about this. I think the new updated data may show this, that there was more shorting going on Tesla, and that is true. 55.5 million Tesla shares were shorted just 2 days ago, and yet Tesla's holding up nicely and it's pumping on low volume. Why is this happening? Because of some short covering. Shorts are noticing some good news about Tesla. They're starting to cover their positions, and as a result, they're hedging by buying shares. When the hedging is going on, this is pushing Tesla up higher. That's the reason why they're closing those like put positions. So that's why, with all the shorting going on in Tesla, this is leading to more upside. I did mention that this was a possibility earlier. I didn't expect it to happen like this, but it is what it is, right? So more shorting led these shorts to being squeezed in a way, and then they start hedging, which is pushing Tesla up on low volume. That's why Tesla's not seeing like 130 million, 140 million in volume, yet it's holding up so nicely. The shorts covering is playing a big role. Now, Fridays tend to be green historically about 49% of the time. We tend to see more volatility around noon Eastern time and also around 2 o'clock p.m. And don't forget that despite the fact that September is a little bit weak, October tends to be not the strongest for Tesla as well, but November and December tend to be stronger months for the stock historically. The price price ratio is going up because Tesla is gaining relative strength compared to SPY. You guys can see it right over here. Compared to one another, Tesla is getting stronger. That's a very, very good sign for the stock. So now let's break down these charts very, very quickly and very briefly. How on earth are things looking for Tesla? Honestly, guys, Tesla's continuing to uptrend and it looks more bullish. We have a potential bullish wedge developing on the chart, and it's continuing to make higher highs and higher lows. So look for this thing to potentially slow down with the data coming out, the industrial data and the exports and imports tomorrow morning. It could slow down a little bit, then either approaching the 10 o'clock a.m. Michigan consumer data or after it. I think we're going to see some more upside, and Tesla's going to push for 278 to 280 just based off these technicals. That is what they are suggesting. Now, could it push even higher to like 282, 285? There are also possibilities, but I just want to note those levels. Now, for supports, don't forget we have 275, 274, 272.5, 270, 268, and 266 as supports. I don't think it's going to drop that hard. I just think that's going to be a tiny little drop by the time we open during the pre-market, then a nice push up after that to the next resistance level, which is going to be around 276. We have some resistance. 278, 280, 282, 285 are all resistance levels. I think Tesla's going to push close to 280 very, very soon, or even higher than that. It definitely has potential, especially because of all the shorts piling in. They're likely going to get squeezed even more. Now, part of why the market's holding up is because of the options chains. We have lots of these options expiring. Now, looking at SPY, I just want to mention that this is resembling a cup and handle. You guys can see it right here. We did drop in the morning. We kind of pumped and then dropped as we expected, but the market ended up getting bought up like crazy because the data just wasn't like bad enough for the market to drop, right? We actually saw, CPI and PPI being a little bit hot on some of their different sectors, just a tiny bit, but it wasn't really that bad. And if anything, the market remained optimistic because the Fed is not really incentivized to make major changes because of that. So for that reason, this is looking like we're trying to get back to 452 on SPY. I'm looking at this cup and handle. And I think 452 is going to be a target, either approaching the Michigan Consumer Sentiment Report, or maybe after the report comes out, we start pushing for 452. I'm leaning more bullish, at least for the morning, and I think there's more upside still coming, at least when we start off. Now, for Apple, this is also looking quite good for Tesla in the market because on the 30 minutes time frame, we have a potential change in market structure. We were downtrending really hard on Apple in the past. Then today we made this low right here off the head and shoulders that formed. Then we formed a bullish divergence in the process and Apple started bouncing. Apple has a bullish wedge developing. This is once again looking quite good, and this may start pushing towards this 177 area very soon, in my opinion. It looks more bullish than bearish, and the odds do favor upside for Apple, which could help Tesla and SPY hold up. The IWM is also looking more bullish. 187 is on the table, looking at this bullish wedge that's also developing just like that of Apple. Obviously, the Russell 2000 is different, but it is looking very similar in terms of just the chart. The QQQ looks more bullish. We have a cup and handle forming on it as well. You zoom out like this, you can see we have this cup and a handle forming, and there's likely going to be more upside. Now, could we gap down a little bit in the morning? It is possible we retrace to like 377, maybe the 376.5 area, just a little bit when the industrial data comes out, because we do have this bearish divergence right here. So we may gap down tomorrow, start off a little slow, then start pushing, either approaching the Michigan Consumer Sentiment Report or after the report comes out for 378 to 380, which could be tested as soon as tomorrow. I think there's more potential for upside, especially because of Nvidia. Nvidia could help out as well because it has a potential inverse head and shoulders forming on it. You guys can see this quite nicely. There's a change in market structure, as before we were making lower highs and lower lows just like Apple. Now we're making this high right here. Notice how we were down here, we made this high, we came down, and we could start pushing from here. This is looking like an inverse head and shoulders that's forming. As long as we hold above the 200 EMA, I think Nvidia is going to either be range bound a bit between 462 to 452 and just trade a little sideways before it tries to break out, or it could just start pushing up from here. There is most definitely potential for it. If it breaks and holds above 462, there is potential for it to test 465 then 470. But it may take a couple of trading days to get there, but overall, this looks like a nice accumulation, a nice inverse head and shoulders, and needs a little bit more time before we see this thing potentially break out, in my opinion. It looks like it's going to just trade in this range for a bit and then break out later, or just try to break out very, very soon. So watch for some upside in Nvidia, watch it potentially try to break out soon, and be very, very prepared for that. Microsoft may gap down. I'm going to be kind of quick with this. Could gap down towards 337.5, a little bit lower, then start pushing again towards 342. There is definitely potential as this thing is making higher highs and higher lows. Watch for it to gap down, then push higher. It is still looking more bullish overall. No signs in market structure have developed just yet. AMD, just like Nvidia, could be developing an inverse head and shoulders. Going to be watching this thing potentially come down to 105.75. I mean, we could go a little lower towards 105 flat towards this imbalance, but as long as it holds this support around 105, we could be establishing an inverse head and shoulders to bounce, start pushing towards 110 plus once we break 108 at the 200 EMA. So watch it drop a little bit. I mean, I could see the mid 105s, if not 105 flat, a bounce after that, a test of the 200 at the 200 EMA at 108, and then a push for 111 seems possible. So it dropped in a bounce on AMD. Netflix is at support. We're going to be watching to see if buyers step in. If they fail to step in, 390 is on the table. If they step in at 398 to 399, we could see Netflix bounce and try to head towards 405 plus. Now, could this also be developing a different structure? That's also a possibility, but in my opinion, there is potential for Netflix to bounce. It's very, very oversold. It is due for some kind of bounce, so I want to be watching for that to potentially develop. So watch and see this area. It should try to bounce here. If not, 390 could come before a bounce, but I'm thinking right around here, it's getting ready for some sort of bounce. For the HYG, it's pushing as bond traders are buying into the market more, which is another bullish signal. The VIX, even though the VIX is establishing a bullish divergence, we could see it bounce a little bit tomorrow, maybe gap up as the market gaps down. But the VIX is still looking bearish on the 4-hour and also on the daily chart. It's not looking very strong. It's continuing to downtrend. So we might see the VIX eventually break down. So maybe it gaps up, pushes a little bit in the morning thanks to the bullish divergence. The market may start off a little weak gap down just a tiny bit, and then the VIX may start tanking as the overall trend looks bearish, and the market may start pushing higher as SPY breaks to like 452, Tesla starts breaking out, and etc. The dollar also has a bearish divergence, which is a bullish signal for the markets. When you look at this divergence, look at the MACD and look at the RSI relative to the price. Dollar broke out like this. Now, could it go a little higher? Yes, it could, but it may reject soon and start cooling off and make its way back down to 105. If that's the case, this could cause, or at least be correlated with the market potentially, pushing up while the dollar drops. Coinbase could be testing 86 very soon. There's definitely potential for it. We have a change in market structure. Going to be watching it to cool off to about 82 and then push for 86 very soon. Google may gap down, once again, retest 137.5, then start pushing for 140. There's definitely potential for that. There is a bearish divergence, so it may cool off a little bit tomorrow morning. Retest 137, then try to bounce. And I think that there is potential for it because the trend is still looking quite decent. The 10-year Treasury yield is actually kind of flat. It's not really telling us much about the market as it normally does. If this is an inverse head and shoulders, if this is going to move up with the market, then this thing potentially pushing up to fill this gap could be good for the markets, but that's typically not how it goes. We'll just have to wait and see. It's not really as telling for the markets. It's not as significant as before. Amazon is looking like it may gap down tomorrow, retest 142.8. Bounce off that to start pushing for 146. I think that's very probable. So it may kind of like slow down a little bit more than try to bounce. It's not looking as strong relative to the market, but there is potential for it to drop then bounce. Uh, Meta may retest 309 to 310, then start pushing higher. This is starting to respect a very nice uptrend, making higher highs and higher lows. And when you zoom out all the way, you will see that we have this accumulation structure and potential to go even higher towards that 314 to 317 resistance. So my guts is telling me we also have this imbalance up here on Meta around this like, I think we actually filled this imbalance around 314. We have this resistance around 317. So I'm thinking we may gap down towards 310 and start pushing higher towards 315 to 317. Anyways, we look more bullish on Meta on the 4-hour time frame. The market is quite interesting with all this volatility and all these new pieces of price action, but it's always important to read the trend and watch it all very carefully. I give you guys my 2 cents. I give you guys my predictions on how I think the market is going to move. And as of right now, the bigger trend is favoring the bulls quite a bit more. All right, so watch it for tomorrow. Remember, there are lots of options expiring. We have millions of options expiring on SPY for tomorrow and also for other tickers. So we're going to be seeing how the market makers affect the markets. The market makers do not have to cause the market to squeeze insanely hard. They don't have to cause the market to do way too much, and they're going to be fine just looking at the current way things are looking. But there is a chance they may still try to squeeze more shorts, as they tend to do that when they have an overwhelming amount of shorts expiring. So there is a risk of them potentially just doing that. They don't have to do it to survive. They may just do it just to benefit themselves a little bit more. So there is a risk of that happening, and I do believe that there may be some more upside for tomorrow overall in the market. All right, hopefully this video was as clear as possible. Remain calm, cool, and collected, everyone, and I'll see you guys in the next one. Thank you, and peace out.